Money changers, those who loan out and manipulate the quantity of money, were active in medieval England. In fact, they were so active that acting together they could manipulate the entire English economy. These were not bankers per se. The money changers generally were the goldsmiths. They were the first bankers because they started keeping other people's gold for safekeeping in their vaults. The first paper money was merely a receipt for gold left at the goldsmith. Paper money caught on because it was more convenient than carrying around a lot of heavy gold and silver coins. Eventually, goldsmiths noticed that only a small fraction of the depositors ever came in and demanded their gold at any one time. Goldsmiths started cheating on the system. They discovered that they could print more money than they had gold, and usually no one would be the wiser.
Then they could loan out this extra money and collect interest on it. This was the birth of fractional reserve banking. That is, loaning out many times more money than you have assets on deposit. So, if $1,000 in gold were deposited with them, they could loan out about $10,000 in paper money and draw interest payments on it, and no one would ever discover the deception.
By this means, goldsmiths gradually accumulated more and more wealth and used this wealth to accumulate more and more gold. Today, this practice of loaning out more money than there are reserves is known as fractional reserve banking. Every bank in the United States is allowed to loan out at least 10 times more money than they actually have. That's why they get rich on charging, let's say, 8% interest. It's not really 8% per year, which is their income. It's 80%. That's why bank buildings are always the largest in town.